Hope you are having a good weekend. Now, we just came out of a very profitable trading week. Okay, we were up about 190 pips for this week. Okay, and we just closed the book for the month of August, and we smashed through the 500 pips profit for this month. Okay, in fact, it's almost 600 pips. So it's a pretty good result. Okay, so we hope you made some money. Okay, if you didn't, right, it's time to reflect on why you didn't make money, especially when many of the signals we sent out were free signals. Okay, especially this week. Now, with that being said, I'm back here with another market outlook video where I want to show you the key levels and the buyers to pay attention to for next week. Okay, we had a good week and we had a good month, but we need to always be preparing for the next week. Okay, because just because we do good this week doesn't mean we will do good next week. So it's very important that we prepare. Okay, so as always, what I'll be going through is I'll be going through this currency pairs. I'll give you the key levels and what I think you should be doing. Okay, should you be buying or should you be selling? Okay, if you're new to the channel and you haven't hit the subscribe button, right, do hit the subscribe button. Okay, we have many trading videos on this channel and we actually trade. Okay, we show you our signals in real time in our Telegram channel right here. Okay, again, this Telegram channel is free. It's a public channel. Leave a link in the description down below. Okay, we are actually trading in the trenches with you. Okay, we don't just talk theory, don't just give you a level and not trade. We actually give you the level and we trade it ourselves. In fact, our team monitor the market almost 24/5. Okay, almost literally we don't actually sleep, because sometimes you can see sometimes our signals are even at like 4 AM out in our local time. Okay, so you definitely get a lot of value there. If you haven't already joined us, please make sure you join us. Now, the first thing I want to do is I want to talk about the Forex Factory Economic Calendar. Okay, I want to talk about what to expect next week. Okay, so next week you can see on Monday we have a GDP, or rather GBP pound. Okay, we have pound bank holiday on Monday. Okay, that means that next week on Monday, don't expect the market to move during the Euro session because the bank is having a holiday. Okay, so expect Monday to be slow. Okay, don't be in a rush to take a position because you can see that there is not much there's not much news and you have the bank holiday as well. Okay, if you want to trade breakouts, probably focus on the US trading session because the US market is still open even though the pound bank is having a holiday. Okay, then next week we also have this FOMC speech here and this one here. Okay, now just take note of these two speeches. Okay, these two speeches are not your usual typical high impact news. You can see that it's orange, so orange means that it's medium impact. These are FOMC speeches by a member, so it's not as significant as your usual FOMC conference that we usually have. You know, the kind of conference that we hate a lot, the kind of conference that we always talk a lot about. Okay, this is not that kind of conference. So for this reason, we don't think that you should be paying attention to this or this. Okay, what you should be paying attention to is actually this one right here. Okay, we have non-farm payroll next week, or otherwise known as NFP. So NFP is a week where normally the price is very whippy. Okay, so next week, with that in mind, we are looking to buy below support and sell above resistance. Okay, I'll repeat it one more time. This is very important. We are looking to buy below support. Okay, not buy at support. We buy below support and we sell above resistance. Okay, so in essence, we are trying to fake the movement. Okay, something like, let's say this is resistance. We are trying to sell above the resistance. If this is support, we are trying to buy below the support. Okay, again, I'll run through these levels with you in a moment's time. Okay, but for now, right, please do me a small favor and hit the like button if you appreciate the work that we are doing. Okay, I'm recording this video on a Saturday. It's 11 AM right now. I'm burning my weekend to help you prepare. Okay, so I think the least you could do is just hit that thumbs up button to support me. Okay, now with that being said, as always, I'll be using the MPE trading strategy right here. Okay, MPE stands for market condition, price level, and entry. This analysis that I'm going to do on the charts is not going to make sense if you do not understand what MPE stands for. Okay, so please go to the link in the description down below. It will take you to this website. Input your email and we will email you this complete trading guide. Okay, it's pretty comprehensive. We have the candlestick pattern cheat sheet as well as the exact strategy that we recommend that you use if you are a beginner. Okay, again, I won't go through this because I've covered this multiple times. But what I want to do next is I want to move on onto the charts, which is why you are here for. Okay, so this is DXY. As always, DXY stands for dollar index, represents the strength of USD. So if it's going up, that means USD is going up. If it's dropping down, that means USD is weakening. Now you can see that the market condition wise is still bullish. Okay, remember we are using the MPE. M for market condition, so we start with market condition. You can see that this is a high, low, higher, higher low, higher high, okay, higher low still. So this low here hasn't been violated. In the previous market outlook videos that I talked about, I said that this low hasn't been violated, okay, and true enough, it hasn't been violated yet. So we are still bullish, okay, and right now if you were to draw this trend line, just connect it like that, you can see that price is actually being supported and it's very close to this recent swing low. Okay, this recent swing low is strong as well, because just look at the movement up here. You have this big engulfing extended range candle, and then after that it paused, it went up. So this level is strong. In fact, if you were to look here, you can see that there's a pin bar here and over here as well. Okay, so this level will be strong. So I'm expecting price to rebound, okay, rebound higher. However, do take note that there is a strong level at 93.067, which is this level right here. Okay, it's a very easy level to spot. You can see that this level here was holding. Then right here it was holding as well, and over here you can see that this is a shooting star. Okay, so do expect dollar to strengthen a bit, strengthen upwards. Okay, but the range might be pretty tight, because once it strengthens, then it gets hit into resistance. Okay, so the range is probably going to be very tight. Next week again we have FOMC, sorry, not FOMC, we have NFP. Okay, so please be very careful. You want to buy below support and sell above resistance when possible. Now moving on to euro dollar. Okay, euro dollar, there seems to be a change in the trend. Okay, so let me just draw one more line. Okay, you can see that previously it was a low here, high, lower low, lower high, lower low. Okay, right now you can see that this high hasn't closed above this high yet. Okay, but it seems like it wants to close above. Okay, and if you draw this trend line down, you can see that this level was broken, and this candle right here retested this level. Okay, let me just zoom in. Okay, retested it almost to the peak, and then it found support, and then it start going up. Okay, so for this reason, I think that euro dollar is probably moving into a bullish market condition. Okay, so the next thing that we need to pay attention to is P, which is price level. Where is the price level? Now I would say that this level is very important, which is actually the left shoulder. Okay, we have the left shoulder here, we have the neck, and we have the right shoulder here. Okay, in fact, if we were to switch to the line chart, okay, at least on the H4, okay, let me just show you. You can see that there's somewhat like an inverted head and shoulders pattern being formed already. You have the left shoulder here, you have the head, and you have the right shoulder here. It's a very small one, but if you are a bit more observant, okay, if your eyes are trained, then you'll be able to see this. Okay, now switching back to the daily time frame. Now right now price is kind of at like the neckline, because if we see this as a left shoulder, head, and right shoulder, then this is the neckline. Okay, so right now price is right smack at resistance. Okay, so please do not chase after the market. So I do not know whether on Monday price will actually retrace down first, or will it just go back up, or will it just break through and then go straight to here. Okay, but what I prefer to do is I prefer to wait for price to close above the neckline, okay, break above, and wait for a retracement down. Look for a candlestick pattern right here. Okay, now this could be a hammer pattern, it could be an engulfing pattern, it could be a piercing pattern. If you do not know any of these patterns that I just said, right, please get our day trading guide, because that's already covered in a day trading guide, and I don't want to spend too much time going through things that I've already provided you with. Okay, now the other thing that I want you to take note of is this level right here. Okay, this level is the recent swing low. Okay, so this level will act as form of support. So if price starts retracing down, potentially this might happen also. This situation might happen as well. Okay, but remember, if you buy here, okay, this level is strong. So if you are buying here to here is only about 25 pips space. So if you get in a confirmation candle right here that is somewhere right here, like maybe at 1.178 3, then it doesn't really make sense because you are buying very close to resistance. Okay, so my preferred way of trading this is still to wait for price to break out here, look for a retest back to this level and take the trade. Because between here to here, there's a big profit margin. Okay, here to here, it's about 90 pips profit to be made. Okay, but if you buy somewhere in here, you are literally buying straight into resistance. Okay, so hopefully that is clear. Let's move on to pound dollar. Now, pound dollar is a little more tricky. Okay, previously I did talk about this support. Okay, last week I said if this support is broken, then we'll see this level. But this support didn't break, and I did caution that this could act as a support or rather resistance level that price retraced to, and this level as well. And you can actually see that what I mentioned actually came true. Okay, I mean, I mentioned that it might break down, but I also mentioned that this level and this level are very important. Okay, and true enough, you can see that price was resisted here and price was supported right here. Okay, so this is why it's very important that you understand the key levels. Okay, or rather you take notes. You don't just watch this video, you actually take notes and record these key levels down so that you don't actually start selling into this level or you don't buy into the resistance. Now, pound dollar, I would say the market condition is mixed. I won't really say it's bullish or bearish. I would say that it's probably ranging. This is the support, this is the low end of the range, and this is the high end of the range. Okay, so I don't recommend that you trade this because if you're a beginner, okay, what I always say is that if you're a beginner, then you want to look for the market to be trending. Okay, if it's uptrend, you want to buy, and if it's in downtrend, you want to sell. But in cases like this where it's range bound, it's better to skip it. Okay, but let's just say you really want to trade it, then probably if this level is broken, then there's probably some space between this level and this level right here. Okay, so if you really want to trade this, then ideally you just wait for price to break above, look for a retest down. Okay, very similar to euro dollar, and then you take the trade up. Okay, now moving on to dollar franc. Dollar franc, okay, this one also it's quite mixed. I would say the sentiment, or rather the market structure, is kind of mixed. It could be bullish, it could be bearish, depending on how you see it. Okay, but right now what I would say is that price is right smack at support. Okay, on Friday price just closed somewhere here. Okay, now this is still an inverted head and shoulder pattern. You have the left shoulder here, you have the head, and you have the right shoulder. Okay, so in a sense, if I really have to make a decision on whether to buy or sell, I would say that the market condition is more bullish, and I'll be looking to lean towards the buy side rather than the sell side. Okay, especially when we have price being supported at this level right here. One thing to note is that on Friday, price actually closed below this low, okay, let me just clear this. It closed below this low, and barely below this low, okay. However, remember that support and resistance are never a single line. It's never just this line, okay. This is an important lesson that you must understand, is that support and resistance are never a single line. It's always a zone. So you cannot just say that, okay, this level is broken, let's go short because the support is broken, okay. You do have to consider that all these wicks, okay, wicks like this, you can see this lower wick here, this lower wick here, this lower wick here, these are support as well. Okay, so something like this is an entire zone of support. So for this reason, do not start selling into this, right, saying that this level is broken, because it's not clearly broken yet. Okay, so if you really want to trade, I would say that you wait for a candlestick pattern. Okay, you might get a pin bar on Monday, and then if you get that, then you can buy it up, and then you can target something like this. Okay, that's how I would trade it. Alternatively, if let's say this level breaks down, then I want to see a very clean break of this level. Okay, I want to see that price close substantially below this low. Okay, not just a borderline close, but a very substantial close. For example, this low is about 0.90998. Okay, if it closes at maybe 0.9070, okay, maybe it closes somewhere here, okay, or 0.9080, okay, something substantial, then I would say that this level is broken. Okay, again, wait for the retracement back up, look for a candlestick pattern, and then we short it down. Okay, I'll send this out in the Telegram channel if I see anything. Okay, so definitely join us right here. Okay, we send out our signals for free on this channel, so there's really no reason why you shouldn't join us. Okay, it's totally free. Link is in the description. Now moving on to Kiwi dollar. Kiwi dollar market condition, I would say, is still bearish because you have the high, low, lower high, lower low. Okay, this recent high here has not been violated. Okay, price is just retracing, even though there seems to be some strength in this retracement. Okay, just compare this retracement up versus this retracement here. Okay, you can see that this is much stronger. You have few big candles up. This one you have a big candle up that consolidate, one candle up, consolidate, one candle up, and it starts to retrace. So this is a stronger movement up. However, market condition is still bearish. Market structure wise, you see that this is not violated. Now price is approaching this level right here, which it's a very strong level because we have multiple levels of confluence. Number one, we have this descending trend line, which will definitely act as resistance. Okay, number two, of course, we have this horizontal level. Okay, just switch over to the line chart. You can see that this was a double top pattern, and if you just look at it historically, you know that this is a strong level. You see it's resisted here, and of course here. Okay, lastly, okay, I want to point out that right here, this candle right here is actually supply. Okay, if you watch our previous videos about supply and demand, this actually constitutes as a supply zone. Okay, so what's a supply zone? It's a zone where big institutional traders are selling at. Okay, you can see that they started selling here, and that's why you have the very big movement down. Okay, one of the criteria of identifying supply is the departure from the level. Okay, I'm not going to go through that in this video because I've already done a very comprehensive video on that topic, but I just want to highlight that this is a very strong level because we have multiple confluences. Okay, we have the trend line, we have the structure level, and we have supply. So I'm definitely going to be looking at this trade next week. I'll be looking to sell right here. Okay, all we need is just for price to come up higher, show us some form of rejection, and then we can take the shot down. Okay, this is a currency pair that I recommend that you focus on, not pairs like, you know, pound dollar right here, which, you know, it's not very clear. Okay, try to stick to currency pairs like this, which are very straightforward. Now moving on to Aussie dollar. Aussie dollar, same thing as Kiwi dollar. Okay, again, market condition is still bearish because we have low, high, lower, low, lower, high, lower, low. Again, this high is not violated, and we have the same exact setup. Okay, normally Kiwi dollar and Aussie dollar are the same. So if you see something in Aussie dollar, you normally see it in Kiwi dollar and vice versa. So right here, this is supply as well. Okay, same concept. You can look at the departure from here. You have this big engulfing pattern, or rather this extended range candle, big this low or what I call the harami. I believe it's called harami. Basically, there's no lower wick, bearish harami, or I think, okay, I can't really recall what the name is, doesn't matter. Bottom line is that there's no lower wick at all. Okay, it just closes right at the bottom. Okay, and then after that, you have a very big candle down again. So this is definitely supply. So this is going to be a strong zone. Now, what is lacking is that we need price to show us some form of rejection of this level. Ideally, a pin bar that spikes into this level and then gets rejected. Okay, that's what I want to see. If I see that, then I'll go ahead to take the trade. Dollar CAD. Okay, dollar CAD. Let's talk about market condition. Dollar CAD, it's bullish still. Okay, I talked about this multiple times last week. Okay, there's no changes because this is the high, this is the low, this is the higher high, higher low. Okay, trend line is not broken. The recent low right here is also not broken. In fact, this was a pretty nasty trade because if you see right here, price right smack into this level, price, you know, did this very ugly looking I would say this is shooting star, okay, but in the wrong direction because ideally we wanted to buy, we would prefer the shooting star to be the other way, meaning that the wick is to the downside, not to the upside like this, okay, but nonetheless, this level is holding, okay. We talked about this level previously and why this is a strong level, okay, this level is still valid. Okay, if you just switch over to the line chart, you can see that this level is actually this high right here. Okay, this is a very strong level. However, one thing that I want to point out is that next week is NFP. Okay, so what is going to happen is usually I mentioned earlier is that price is going to be whippy and you want to buy below support. Okay, remember just now at the start of this video I said we want to buy at below support, sorry, not at support, below support. So this is how we are going to do it. This is support. Ideally, we want to wait for price to come down, okay, show us a rejection of this trend line and maybe a long wick, because people who bought here would have placed their stop losses here, okay. Very common practice is if you buy, let's say you buy on this engulfing pattern here, and you put your stop loss below here, what the market is going to do is the market is going to whip you out first, okay, especially during NFP weeks. The market wants to whip you out first before it starts moving up. So if you haven't entered this trade, please be patient, right? Wait for price to come down lower first, take out the stop losses, look for a form of rejection here. If we get that, then we go ahead to buy it up, okay? Of course, the next level will be this recent swing high. This can be your first take profit, and of course, if this is broken, then the recent high here, which many weeks ago I did warn that this is a strong level, okay, and true enough, we got a shooting star pattern on this level right here, okay. Now let's look at dollar yen. Okay, dollar yen is still in a mess. Okay, last week I recommend that you avoid trading this. I said that this is just range bound and it's very messy. I highlighted that this is the support. Okay, this zone here, 109.19 to 109.42 is support, and this is resistance. Okay, these two levels are still holding. You can see that on Friday, price spiked this level and still holding here, and now it seems like it's going down. Okay, I don't recommend that you trade this because even if you get a confirmation candle like this, okay, this is actually an evening star pattern. You have this candle, then you have something like a doji and then a bearish engulfing pattern. This is an evening star pattern. By the time you get the signal, you are already selling in the middle of the range. Okay, so if you were to do something like that, you can see that your risk to reward don't make sense. Okay, so please avoid trading this, okay, at least on the daily time frame, at least based on the MPE trading strategy. If you want to go into the H4 time frame to trade, then that's an entire different strategy. But if you are still new, you're still struggling, I recommend that you stick back to this daily time frame, because this is the time frame which is the easiest to make money off. Okay, you just need to follow the plan, follow the MPE steps that I've outlined in the day trading guide, and you are golden. Now, this is XAUUSD, which is gold. Now, gold did a very nasty sell down. Okay, a lot of people lost a lot of money. I know friends who lost about like $15,000-$20,000 just from this sell down. So hopefully you wasn't caught here. Now, this is actually a very ugly looking inverted head and shoulders pattern. So let me just switch to the line chart so that it's clearer. This is the left shoulder, this is the head, and this is the right shoulder. Okay, it's very ugly, and you may or may not have seen it. Okay, but you can see that right now the market condition is looking quite bullish, because you have the high here, you have the low, you have the higher high, higher low, and higher high. Okay, now just be careful, because if you were to look at this entire movement from here to here, you can see that this is a low, this is a high, and this is a lower low. As of now, this high hasn't been violated. Okay, so in a sense, the short-term trend here, immediate trend, is bullish, but the bigger trend here is bearish. Okay, so remember, trend is relative. It's relative to the time frame that you are looking at, and it's relative to the chart data or how far back you are looking. Okay, in fact, if let's say you were to look at the long-term time frame since probably 2015, you can say that at a glance, gold is definitely in an uptrend in the long run. But you have to understand that we are trading the short term, so it's important that we pay attention to what is the trend now. Okay, if you want to swing trade, or you want to do a position trade where you hold a position for years or even months, right, then you shouldn't be looking at this small trend. But for us, we are just here to make a couple of pips, okay, maybe 30 pips, 50 pips. So we prefer to stick to the short-term trend, which in this case is bullish. Okay, now with that being said, you can see that there is this ugly neckline here, and price on Friday just closed right smack in this trend line. Okay, so I don't recommend that you chase after it. I recommend that you wait for price, just be patient, wait for price to close above and retrace, and this would confirm that the pattern, the inverted head and shoulders pattern, is confirmed, and it would have reversed this entire downtrend, because right now if you get a close above this high here is violated, and it is no longer making a series of lower lows and lower highs. So that would be very good, because you have this series of higher highs and higher lows right here, and this thing is being violated. Okay, so just be patient, wait for price to close above, look for a retracement to 1829 or 1830, just to be easy to remember. Look for a candlestick pattern, and then you can take the trade to buy. Okay. Euro pound. Okay, Euro pound market condition is bullish. Okay, I've talked about this previously as being bullish because we have a high here, low, higher high, higher low, higher high. Okay, if you were to go to the H4 time frame, I also drew in a trend line. Okay, you can see that this trend line sits very nicely. You have the low here, and then it connects here, and true enough, price is finding support right here. Okay. Now, the issue is that this level is very strong, okay, but this level is also very strong. So both support and resistance levels are very strong. So I don't recommend that you buy in this zone. Okay, I recommend that you just be patient, wait for price to break out. Once it breaks out, look for a retracement down, and then you can buy here. Okay, because if you were to buy here, chances are by the time you get confirmation, like for example on this is Thursday, by the time you get this engulfing pattern, the price is already at resistance. Okay, so the range is quite tight. It's just about 30 pips, so it doesn't really make sense for you to be trading in this range, okay, unless you want to just buy low without confirmation. Okay, meaning that you just buy, just put in a limit order and bet that this level is going to hold. Okay, that's the only way to trade it. Again, I don't recommend that you trade it like this if you are a beginner. Okay, because this is really more like betting. It's not following, you know, the rules of the MPE trading strategy, which I teach in the day trading guide. Okay, so if this level is broken, then of course this level is the recent high, then we can look to take some profit right here. NZDUSD 100. Okay, NZDUSD 100 is definitely an uptrend. There's nothing to talk too much about it. You have a high, low, higher high, higher low. Okay, if you tell me that this is bearish, then you obviously do not understand technical analysis. Okay, there's no way this is bearish, at least on the daily time frame. Now, same thing. Okay, on Friday, we had this nice engulfing pattern. Okay, so this level seems strong. Okay, however, do take note that next week is NFP. And remember what I say. Okay, buy below support. So next week, what am I expecting is that I'm expecting price to go below, lower than this support to stop people out. Okay, a lot of people are going to buy here, chase after the market, put a stop loss below. And once it starts, you know, retracing down, what the market is likely to do is the market is going to whip out all these stop losses, retrace down lower, hit this key level here, and then start bouncing up. Okay, so be patient, right? I'll be looking to buy at 15149 rather than this level. Okay, don't be deceived, right? Price may very well do this as well. Okay, without a doubt it might do this, but because next week is NFP, I would prefer for price to whip out these stop losses first and then I go long. Okay, that's how I prefer to trade it. Price might just go up, we might not get a signal, but that's fine. Okay, we want to be safe. Now lastly, we have pound yen. Okay, pound yen. Now pound yen is just like pound dollar. It's in a mess. Okay, I think this is kind of like mixed. I won't say it's bullish or bearish. All I can say is that this is support, this is a very strong support, and this is a very strong resistance. Okay, and right now we are in the middle of the range. Okay, and if you look right here, okay, let me just break down this entire pattern for you. Now, actually, if you are a bit more observant, you can see that there's actually an inverted head and shoulder pattern here. This is the left shoulder, this is the head, and this is the right shoulder, okay? And right now, price seems that it wants to go up, okay, towards this level. So right here, we actually have an inverted head and shoulder pattern, and you can see that this high right here, okay, this high, this candle high, is acting as support, okay? You can see that on Thursday, price failed to close below it, and on Friday, price is holding above it, okay? So I do think that this is a good support and that price will retrace higher, but I don't recommend that you trade this, okay? In fact, if you were to just extend it out to this low here, you can see that this is why price was supported here. Okay, I think it's an okay trade if you are trying to trade on a H4 time frame, maybe something like this. Okay, let me just show you. Maybe you buy somewhere here, put your stop loss just below. Okay, something like that might make sense. Okay, but I think if you want to stick to the daily time frame, then this might not be the best setup. Okay, again, this requires more experience. It's not something that I recommend. I recommend sticking to currency pairs like Kiwi dollar, which is very clear, and Aussie dollar. Okay, try to avoid pound dollar and pound yen. And I think this one is okay. Just wait for it to break out. Okay, so that's all I have for you in this video. Right, I hope you have a good weekend. Right, please do support the channel. Do hit the subscribe. Do give me a thumbs up if you have already done so. Okay, I look forward to seeing you in the Telegram channel. Right, please trade safe, and I'll see you there.